Good morning, everyone. Microphone check. Screen check. Looks like everything is working correctly here. Good. Right? Yeah. Man, sometimes, I tell you, sometimes the microphone, like the volume bump thing won't move. It's like it's just not picking it up, but then after a couple seconds it does. I don't know if there's like a volume cutoff or I don't know, but we're good to go. We're good to go. Good morning. Good morning. Anyway, welcome. Good morning, SSFTG family. Whoops, hang on a second. Get my morning brief going in the right place there. I hope you all had a chance to, holy moly. I hope you all had a chance to rest up and get ready for the day ahead. As per the usual, make sure to read through the morning prep PDF on the right side of the screen. Very important to go through and understand everything that is inside there. Just a quick note for you all before we jump on in today. If you're watching on the YouTube side of things, the stream does have between like a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. Good morning. Just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you have several options to check out if you're looking to further your trading education and career. The easiest way to start out is to join as a member on YouTube. It gets you into our chat room and a bit of a behind the scenes on what's going on. And if you want more information in how we do everything in our trading approach with over 19 hours of video course material, swing over to the main page at SSFTG. Whether you're here for the very first time or you're a VIP vet over on the dedicated Zoom stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts, see what's going on this morning, see what's all happening as we roll into Thursday. Now, don't forget to grab your morning DP levels. Those are posted for you this morning in the Major 7. Nasdaq, S&P Gold, Crude, Euro, Bitcoin, and Ethereum. It's a race every time. Over on the news side of things, we had some earlier news at 8:30, the GDP, initial jobless claims at 8:30 as well. And then the big one that's kind of like, is it going to do anything? Is it not going to do anything? Who knows? That's the Jackson Hole Symposium, which actually just kicked off as soon as we started the room. Perfect timing. That all kicked off at 9 o'clock. And, you know, again, it's one of those things like FOMC where maybe it has a big impact, maybe it doesn't. I have no idea. We're just going to have to approach the markets and see what the market is doing and go from there. That's all the news that we have really to worry about, though. So with that out of the way, pretty straightforward. Looking at the S&P, first off, we've got this still, jumbotron rally to the upside. Hasn't stopped going higher, in fact. But with this momentum higher, we are seeing this as a rolling correction. You know, before we were kind of talking like, well, you know, maybe this is wave 1, wave 2, wave 3, wave 4, wave 5, nice cycle, right? Then we've got a little bit of a sideways ABCD corrective phase, and then we go back up, nice little 1, 2, and then this happened. And it's like, well, wait a minute. You know, if we go way up here, way over, it's so far detached from it, it just doesn't make sense anymore. Something's wrong. We're not doing something that we're supposed to be doing here. And naturally, my eye is going to go back and say, okay, well, wait a minute, what about this? Well, if that's the one, then that makes a lot of sense why we haven't seen a pullback yet. They're still confirming wave 3. But then this happens. It's like, well, wait a minute. Like, wait, is this thing ever going to stop going up? Like, where's the top? Is this wave 3 right here? Was this wave 3 right here? I mean, realistically, wave 2 was a mess. It took a really, really long time. So could this be one of those areas? And, you know, one of the litmus tests for me, if I'm looking at a pullback, is I want to see at least a counter 5-wave cycle that I can see with my eyeballs. I don't want to have to go to another time frame. And it's a good kind of litmus test, if you will, to make sure that you're looking at the right pullback. And we really didn't get any type of 5-wave structure until inside here. We've got wave 1, 2, 3, and then they start going corrective phasing. ABC to the upside, ABC down, etc., etc., etc. So this finalized move to the upside, although it was incredibly shallow, and it should have been a lot deeper. Normally, I like seeing 0.21 at a minimum. This made 0.13. It makes sense. It still fits. This big giant breakout move above the highs, it's a completion of a cycle. It's not the neatest of things in the world, and it would have been, you know, I wish it was a bit better looking, and maybe after a bit more time we'll see something more clean. But as it stands, we've got to assume that we're at the end of a 5-wave cycle to the upside, and the market's trying to go sideways in corrective. Now, just because corrective doesn't mean pullback. Corrective could just mean sideways, or even slightly up with a rolling correction, where we've got these higher lows the whole way up, higher highs the whole way up. It's still kind of going sideways, but it's got a directionality to it. And one of the big things that I want to pay attention to is if that's going to be the case, they're usually breaking above a big node in volume. And, well, guess what? Early this morning, that was the physical test. They got close to it yesterday, and they were kind of messing around with it the last, after that rally to the upside. But this was sort of the proof. Now we've broken above another swing high. We've continued back up. If shorts were trying to go down, that would have taken out their stops. We've gotten everybody out of the way. Now, oops, sorry. When it starts pulling back, any shorts that didn't necessarily exit, how's it going, Ace? Morning. They're going to be looking for break-evens. And they got close into the overnight session and finally finished the job. When was that? That was 3 this morning. So going back to what we've been talking about the last couple days, some of the biggest moves happening in the overnight session, that's why. Right? They finally got their break-evens, and it hit at 3 in the morning. That sparked an entire rally all the way back up for the rest of the session, where we are now going into the settlement. We haven't broken a new high, but the support that's coming off of here at 44.8250 is very telling. And seeing them kind of reach back like this, if this stacks up some more bull bars, that's kind of like that last grab falling off the cliff, like, oh, grab my hand! And, yeah, I know, right? Shocker, it's a 3 a.m. move. This is the last ditch. If the shorts are really and truly stuck, and this is going to break out for another rally up into the 5,000s like we were talking about yesterday in the extended session, or yesterday, I don't know, after 10 o'clock. I'm just used to that being the extended session. That's kind of the upside objective. I mean, it's crazy, but this is the beginning phases. Over on gold, now that my gold charts finally decided to load from yesterday, we've got that strong rotation off of the lows. I mean, we've been talking about that for a very long period of time, but the same thing that the Nasdaq is seeing has kind of happened on gold already, where the market is trying to churn its way up, and you can see it goes very sideways, and they create a little bit of a POC, obviously, with that much sideways action. And then right here, the market finally says, you know what, it's just not working. And they start breaking out through it. The alligator's mouth snaps shut, and it's gone. And that's why I'm looking at the Nasdaq thinking, well, or the S&P rather, like, wait a minute, we're starting to see this happening, and we're breaking above it and now pulling back. And gold is in a very similar situation. A bit more difficult on gold. It's got some downward pressure that it's got to fight off of yet, but kind of the same mentality. Now, a little bit of a difference here if we go back on gold. I'll let this stupid thing load. There we go. And drag this all the way over. We are finally showing or demonstrating a valid seller's attempt. The sellers have very obviously tried to the downside. It would be even better if they could get underneath some of these other lows. And the reason that's important is because we need to make sure that if the bulls are going to take this back up above 1788, because it's so high, right, because it's way up here, we've really got to get somebody trapped in first. We've got to get the shorts thinking that the market's going to collapse and then roll right back in their face and go screaming the other way. Right now, sellers make much more sense because we are in a short-term downtrend, and it's a valid attempt. We're breaking swing lows. We haven't broken major swing lows. That would be down here. And side note, longs, that's where swing longs are going to start stacking up around those 75s. So we've got a little bit of a playroom between the 1788s and the 75s where we might see some bouncing back and forth. Right now, though, the trend is still pretty straightforward, pretty down. Looks like maybe they might be going slightly more sideways. I mean, the other thing that sort of stands out here would be this attempted breakdown that's just not... Like, if it reverses back up... If this gets back above 1788, this looks like a really, really interesting spot on gold. to keep our eyes open on that one. Over on crude oil, continuing to rotate back to the upside, left behind settlement a little bit further up. I mean, we still haven't made it into the 70s, but the way that this is sort of moving, we've had I mean, this thing's, it's ridiculous. It just went kind of straight up and took notes from the Nasdaq, never really pulling back. But it did have some very decent 5 waves to the upside. We've got 1, 2, 3, 4, 5. So in terms of this overall cyclical movement, you know, this doesn't fit a impulse wave. The wave 1 would be way too big. But it does at least fit a 5-wave cycle to the upside, and that does fit also a nice little spike in channel. And with a spike in channel, or I guess in this case kind of a spike in megaphone, or channel a little bit later over here, we're usually looking for that slightly deeper pullback, and that deeper pullback is below one of the previous major confirmed swings that doesn't break another one. We've got 2 stacked confirmed swings right here. This is a very, very nice spot for crude oil traders, and incredibly low risk, very high reward. Traders will be able to buy at this low with stops underneath this low, but reward points all the way back up to the highs. That's at least 2 to 1. That looks like it might even be closer to 2.5 or 3. So the bulls will be looking for a continuation phase back to the upside, noting that their entry points would be at around 67.14 and 66.89 would be the stop. But the upside potential, I mean, this is a 3 to 1. A 3 to 1 fits on the nearest swing right now. That's still not even back up the settlement. I mean, realistically, you're looking at, what, 4 to 1 maybe? Ooh, now 4 to 1. That 4, I normally don't look at 4 to 1s. In fact, most of the time the market doesn't. It's usually looking at 5 to 1s. But that 4 to 1 noticeably also lines up with those inside swings. That's a really nice spot. The probability of success really can't be very high. Realistically, we can't expect this trade to work more often than maybe 27 to 29% of the time. So again, double check our math, right? If we're looking at this setup working 27% of the time, we've got a little extra time. That's why we can go through this. It's a risk of 240. So you're risking 240 and you're losing, well, I mean, realistically, if you're 29% accurate, you're losing 71 times. So 71 times you're losing $240, and the other 29 times that you're right, you're making $960. If you take that positive trader's math minus the negative trader's math, I'm okay with that. That's okay with me. That's fine. A really good week is usually ending in a positive trader's math of around 800 to 1,000. This is a positive trader's math of 10,800. It would be stupid not to, you know? Now, the probability is incredibly low. I'm only going to win this trade like 1 time out of 4 at best, you know, but that's okay. Even if the probability went a little lower to like 20%, it's still okay. So that's why this type of scenario is still feasible. Just don't expect it to win very frequently, that's all. So I'll leave the risk on there. As far as the euro is concerned, we've got the... I mean, we're still holding on to this bear trend to the downside. We've still got these lower lows, potentially lower highs, etc. The big thing that sellers are going to be looking for is a valid attempt, which, I mean, maybe we've seen right here, I guess. It would be really nice to see them catch a nice dive lower, look like they're going to take it down, and same like we were talking about with gold and crude, really. Reverse back up after that valid attempt, because we just haven't seen it yet. There's still too much of a perpetual bear trend. If we were looking at it like that and popping it up on the highs, I mean, we're just breaking above the top. This might be a nice little breakout pullback, so I mean, this is a nice little spot of interest. But we've got to look at it like, what kind of trader would we be if we're buying back at 17,435? Where's our risk? Well, our risk is either underneath this low, which seems incredibly stupid, but that does fit a 2 to 1. Is the probability good enough for a 2 to 1 there? I don't honestly think so. I don't think the probability is high enough for a 2 to 1, even at like 37%. So I would rather narrow this in a little bit lower, try to get into some of this previous structure, and try to structure this so it's a 3 to 1. That way, I'm in the right zone. It does mean that I stand a better chance of missing the trade, but the reward versus risk is much better in my favor, and the target's still ahead of settlement. That would be the breakout pullback that would make sense if you were taking it as a swing trade. Now, the other side of things, if traders are just buying this POC, realistically, they can't be anything other than scalpers. Otherwise, their targets are way up in the stratosphere, which, I mean, hey, if they're taking it off a 60-minute chart, maybe. But from here, this is a scalper's dream. Targets right back up to the highs. I wish it was a little lower, but it's there. So both sides of the fence. Very different approaches, though. Very different approaches. Over on Bitcoin, continuing to pull back a little bit further. Same thing that we've been talking about, though. This perpetual trend, in this case to the upside, is still grinding. We're not seeing new anything, really. Other than these pullbacks seem to be really deep. If we're looking at zooming out just a bit, which I can't on 15, let's go to a 60-minute. Typical value pullbacks. Well, I'll just go to the initial pulse. I know they did go a little bit further, but it's about 12.3%. If we look at the pullback over here, that was 10.4%. That was a 6 points, careful now, 6.61, 5.58. So the typical pullback seems to be about 6% to 8%. And if it's going to pull back through that, it's usually going 10 to 12. Right now, we're at about 8%. So from a value standpoint, buyers will be buying here because they know the risk doesn't have to be that big. They're risking maybe 2% to the downside for, what, 4% to 6% to the upside? Again, it doesn't have to be right that often. We're in a lot of swing territory, if you couldn't tell. We're in nice pullback territories. This is where swing traders are starting to build in on those positions and get into these dips. These dips, mind you, are very small. For Bitcoin, an 8% pullback really isn't that much, but... And then Ethereum, we did break a new high and then rotated all the way back down to where we are now, higher lows. We still haven't seen a valid attempt here. Again, if we zoom out to a 60-minute chart, maybe it gives us something a bit more, but Ethereum on the 60-minute kind of concerns me for a deeper pullback. The fact that we're not hitting the highs, let me use yellow, the fact that we're not hitting the highs up here really makes me think we might want to go back and grab another swing. We were talking about how the market likes trapping the previous double confirmed swings. There it happened right there. Well, guess what? We've got it again. We've got another confirmed swing here and another one here. What better spot than to re-trap the same spot and then rotate back up to the highs? I just don't see a reason why going long here makes any sense unless we gauge some extra proof. Then, different story. You know, rising highs, rallying high, spike in channel, etc. Keep it going. But the miss on the top, that makes me think deeper pullback. All right, over on the Nasdaq, starting off looking at the daily chart. The market did get the value pullback, 3%, pretty typical. Nice strong rally to the upside. Looking at the candle gapping, as far as objectives to the upside go, they're still hanging out up at the 15,464 quarters. We are also pulling back and filling in some of the current candle gapping. The previous candle gap being from the top to there and a little bit further, and now we're pulling back and filling it in a little bit. You'll notice that puts that target relatively close to where the other candle gap target was. So, kind of funny how everything all comes together. We'll see if they want to rally back up to the highs, but this is the first time that the market's broken below a previous day's low since this massive rally to the upside. I mean, they dipped off the highs 3% and then went 4.6% back up towards the top. If we look at the last time we had that type of move, they pulled back 3.6%, rallied up 4.7%. Starting to get eerily familiar considering the last time we had some very small candles while they peaked out. We had candle gapping to the upside that was completing objectives. That next day was very big and very bearish. That gives me concerns for today. You know, if we're measuring off the top, that was a 2.3% pullback last time. So if we're looking at that, realistically, a 1.8, that actually has to go a little bit further. Would I say 2.8? Okay, get this stupid thing out of the way. 2.4, 2.7. So I'd be going back and refilling in just underneath the POC, which, mind you, would be absolutely incredible for a move. That would be bonkers for a washout pullback. Holy moly. If we get down to those 984 quarters, you better believe swing longs are going to be looking to gobble that thing up. I don't know if that'll happen, but that's what happened last time. Just saying, and it's following along. It's following suit. Market repetitions. They love them. How's it going, Steve? Sorry, choking on my drink. How's it going, Steven? Hopefully everyone's doing good so far this morning. Give me a second. There we go. All right. So looking at the faster time frame here and kind of seeing what's going on so far this morning, we've got a decent amount of back and forth going on, but realistically, given the bigger perspective, we've got a nice cycle off of this low. We've got a really nice bounce off of the negative half, and if we look at the 15-minute chart in the bigger cycle, I mean, this is a valid attempt from the sellers, like we've been saying. This is what the sellers needed to see. They're getting that move to the downside. Now, the problem is it's failing back up. The POCs are still way up at the top at 15,360, both off of the top down and off of the bottom, way down there, all the way up. That POC is in the same spot. So that POC shifted inside here. We know that for a fact. We really don't even need the other one on there, but just so, you know, visually I know what's going on. The only other POC we have to work with is back here at 14,960. You know, just a good 500 points away, no big deal. We were just there on the 20th. It was only 6 days ago. As ridiculous as that is. So this is a major zone, you know, and this is a valid attempt from the sellers. If the sellers fail here and we roll back up, that's a huge clue. I really, really, really want to see what are these traders looking like on this downside move. And if we zoom in a little bit closer, we can see it looks like it's got some challenges. You know, sellers just had an attempt to the downside and they're rolling back above. This is a really nice spot. I'm gonna move this one. Yeah. Incredibly interesting zone for bulls to try to get this up. But we can see the battle zone. It's going to be between here. The 327s up to the 360s. See who wins. So far this morning, looking at the overall cycling, we started the day off. Where was the... Oh, it actually was that swing high way up there, huh? Okay. Well, we started the cycle off with an L1 to the downside, followed up with another L1. Actually, L2 in the end of things. Rotated down again into another L2. A lot of traders will be looking for that third L2 in the sequence, and that third L2 in the sequence completely failed. Broken L1 style, but in this case it's an L2. Broken L2 style. Sellers sell into the L2, doesn't work. They sell more into the L3. They still haven't been given a chance to get out of break even. Either some traders that or just taking the loss. We go up into the L4, they sell a little bit more. When they get back to their original entry point, they take all off. Where does it bounce? Right off the L2. Whoa, crazy. It's almost like that's where they first started selling because that's what was expected. But then that's not what happened, so they exited there. It's crazy when you know what's going on, huh? Too bad that happened at 4 in the morning. But with that rotation back to the upside, they're still holding the bear cycles. We've got an L5 now holding off the top. And we've just tried going back down. Where do they come back to? Right off of the L2 again. These traders look like they're really, really getting out at break even. If we go off of the bottom across, we can see what's happening from the POC perspective. The only one that I really care about is the L2, if I'm totally honest. I'll leave it there because honestly I don't know that I would have picked up on that little swing high there, but we've got the L2, we've got the broken L2, which is what they're breaking off of, and we can also see, maybe a little bit of an inverted head and shoulders that was trying to get created. We were talking about this yesterday and last week as well, how when we have lopsided shoulders, I don't like those. We never really broke above it yet. So the inverted head and shoulders hasn't triggered. But if it did, the upside objective would have been about settlement. You can't expect it to go very far. Now we're back down here again. Now, from the bulls' perspective, we know that the sellers are exiting, but from the bulls' perspective, we started this move off with an L3, and we broke higher. Typically, off of L3s, bulls want to see an L1, and they did buy the L1s, and then got dunked all the way down. If they were buying the L2s, no remorse. Buying the L3s, a little bit of support, and if we were to take those average between these, and between these, where did the market bounce back up to? It allowed them out of break even. Right there. So given that it rotated off of a break even, cycled back down, that's why I say this is a valid attempt from the sellers. They had their shot. If this fails, they're going to have a hard time. Unfortunately, we're going directly into the open, so that's a bummer, but the bulls have a legitimate reason. As far as the S&P is concerned, man, where are we? Oh, there it is. We're kind of back in no man's land. Honestly, the S&P would be better served if they can open up a little bit higher in the 92s. They got 4 minutes to get up there. But if we can open up in the 92s, it would look as though the market is opening on support. And it'd be a nice spot for the bulls to pick it up. Where it is now would be it's an inside gap down, but what's here to support it? I mean, it just kind of ripped through here. That's a bit of a concern. It'd be better served to open a bit higher above 92s or on 92s, or a little bit lower, which I'm sure there's a POC inside here. There's got to be. If you go all the way up to the highs, yeah, at 85.75. If they could open up around here or even inside this volume zone, might have some support there. We're kind of in between. Got to get away from here. We are going into the open, but bulls who are looking for a reason to go long are going to be utilizing this rotation back up as that reason. Risk would have to be underneath the lows, which is a bit of a bummer. Upside objective, though, has a lot of potential reward. They'd have to be a scalper right now, though. $9.28 hits. Back underneath the POC. That's why I don't like messing around in the open, but we do have the buyers attempting to defend this zone. Market has closed underneath it. They can't be anything other than scalpers at the moment where it is. All right, 1 minute. Bulls will be looking for that upside continuation. Again, the only risk that we're dealing with right now is we've got the open. Could opt to take it on the micro to minimize risk. One of my rules is not to trade around the open, so. Market back above the POC and hovering. We know that bulls are looking for upside scalp targets. Big old herky-jerky pump-a-dump. Wow! Right back up to the L1. Now remember, this is important because these are the earlier traders who got dumped on. Where did they reject off of? Whoa! Which trade is your board? I love it. We've got the boredom index from Ace. S&P is looking for a bit more push to the downside. I would much rather see 85.75 if I could get it. I'm going to approach the S&P a little bit slower today just because of everything going on. But if you did take that upside scalp to the upside, obviously, jeez, they got their targets filled. Job done. We do also have a bit more continuation to the upside, so we can gauge, okay, you know, the L2 did hold back in the other direction. Where are we now? We just rotated off of it to the tick L4. We should see buying pressure back in an L1. That's the typical case. Now, it didn't break above the highs very aggressively. I would like to see it go, you know, maybe a bit further. But the anticipation is that the bulls will try to pick it back up on a dip. Nice little bear bar to the downside. See if that pulses the sellers lower. Drag the POC forward here and make sure nothing changes. Also, just looking across as far as the confirmed POC of the last bullish move is down here in the 27s. So it's really got to hold the L1 or we're probably going to get an L3. Ugh. Are you serious? Okay, I didn't get a fill on that dip. Oh, and I got a really bad fill on that one. I'm going to immediately jump ship on that. I got a tear. Look how far away that fill was. When I hit buy bid, it was down on the L1. Ugh, what a herky-jerk mess that was. It's not worth hanging on due to negative execution. That throws everything off. The only way this trade makes sense is as a 2-to-1. And if my entry is way that far up, it doesn't work anymore. The long-term probabilities are against me. I cannot stay in that trade. It's not worth it. In this case, yes, in hindsight it worked. Congrats, all that fun stuff. Wish I got a better entry. But from a risk-reward standpoint, that bad entry threw the entire thing off for me. Which is a mild disappointment, considering that I didn't get filled when it was inside the L1. You know, whatever. just a little salt in the wound. It's all good. Gold's still hovering that POC. Very interesting. Well, they did hold the L1 as they should, right? We have the L4 rotation into an L1 straight out of the textbooks, right out of the academy, if you have no idea what I'm talking about. That's, was that Unit 2, Chapter 8? I got that one memorized. More bullish continuation. A lot of traders probably frustrated with that and rebuying that dip. I'm not going to buy a trade out of frustration, but you can see the support that came in there off of that. Seems to be more of an emotional trade. I wouldn't necessarily expect it to break the highs, but it could. Now, I like this secondary flush. That's going to make those traders second guess themselves. That's what buyers want for that next pulse to the upside. Now, if we do get another drive back down to the L1, oh man, again, There we go. Now we're back into the L1s. Nice pulse back to the upside. We're down to the swing lows, but I'd prefer to see it actually test the next zone. I've got to do as much good for my average as I can. As far as upside momentum from where we are now, wow, 3-to-1 doesn't fit. Can they actually get the base of the L1? They did actually get the base of the L1. Okay. Now remember, this is the last point that I'm really willing to hold on for much interest, because the next zone, if it's going to fall further, is likely going to be down into the L3s. So I'll leave this open space in the middle and see if we can modify out with a couple scalps first, get our average in a slightly better position, and then try to hold on for a run. I still love the long side. It's just got to prove a bit more to me. The bulls are still technically holding the L1. And that will allow us a lot more flexibility to try to get this last portion going. A 3-to-1 is up into the 54s, but we'll see where it wants to carry off to. If it wants to carry off to anywhere. The S&P tried dipping lower. Nice bear bar, triggering in shorts underneath that bear bar and possibly reversing back up again is going to put a lot of shorts on the wrong side, but I haven't really seen a whole lot of jumpiness, so I doubt there's been much of a shift. Yeah, POC's still back up in the 350s. That's a really nice follow-up bull bar, though. I like that for a slight increase in risk. POC is shifting down as well. More bulls like that as well. You can see them piling in. We've got to see them actually follow through, though. Closing back underneath the POC. Still hasn't technically hit the L2. And again, I'm not necessarily interested in L2. I'm looking at the L2 as sort of the intermediary. It's more likely anything going to go down to an L3 where the previous structural support was, if these bulls can't get it to rotate higher. Every time they just pop underneath the lows, it jerks right back up again. We'll follow through for the scalper's objective. Let's see if they can go a bit further. 2-to-1 is just outside of the top. And now they're pulsing underneath again. All right, I'm going to jump ship. I need more proof on this. I've tried so many times to get this thing to go, and it's just, ugh. Did it really? That's funny. As soon as you wrote it, huh? That's policy. Auto kick. Bear engulfing candle, giant bear bar to the downside. When I'm looking at this area, I like this as a previous defense off the POC. But the zone of interest, again, we've got to approach this with, I don't know if they're going to bounce off of 45.75, if they're going to go down to 83, 84. I'm not sure where they're going, so I'm definitely of the mindset of scalp. It's a little bit wider risk because of that. It's non-defined. Bulls cycling back up on the Nasdaq. Really, really nice continuation phase. They might not come back after that. That's a really, really nice rotation up. They might not come back after that. I'm interested if they do. Alright, we do have a pullback back down to POC again. I like this for the risk perspective, because realistically, if it starts closing underneath it and failing, it's going to be fairly obvious. So you don't necessarily have to risk a whole lot. Secondary close outside of the lows. I'm going to use this opportunity, this little pop higher, to reduce my risk a little bit because it did dip further back than I wanted it to. But I do not want to get out of this trade entirely because it hasn't broken the lows. I would rather just use this as an opportunity to leverage a better zone. And that gets my 2-to-1 right at the top. Right at the top. Popping above. Still haven't really seen that firm close or break above, but that jerk above, higher, that, I mean, maybe. You gotta wait for the candle to close. This is why, actually. There's the pip, yeah, at 87 quarter. Good old PYP. Pen pineapple apple pen. PPAP. Oh no. Oh no, that song is gonna be in my head all day. Nice potential rotation for bulls to re-up their risk as the alligator's mouth snaps shut, if you will. There it goes. Shorts just realized, wait a minute. Uh-oh. Wait, no, wait a minute. Oh, no, wait a minute, come back. They're starting to pressure him. Inside bear bar. Let's see what they do with it. Sliding back a little bit. Nice bear bar back down, getting closer to break even. Testing this as soon as it hit the break even point. Look at the response. Holy crap. Okay. There's the pulse. Keep going. First objective off at these tops. Nice cycle. Beautiful pulse back up. Phenomenal move. There we go. Golly, you stubborn SOB. Why don't you just let go? Jeez. Alright, nice pulse back to the upside. Now again, the way that I had structured the trade in reductions of risk, I only had the 2. Nice pulse back to the highs. I'm okay with that as far as the continuation goes. There is momentum for maybe more movement. Ugh. Maybe not off of that wedge, though. I don't know, maybe a wedge top? It's not that far away. I don't know. I'd rather be satisfied with the 2-to-1 and say thanks. It was messy in that pullback. This pullback, though, buyers will be re-upping into this for another continuation pulse higher. Objectives for them is going to be settlement 65, 67 quarter, 67 half. As far as overall structural patterning is concerned, we've got the L3, which should have seen an L1. They tried and failed, and when the market came back, it looked like they were going to start pushing back, but then they broke higher again, and that would be an L4 hold off of an L1 continuation, which worked out, but I had a terrible entry, so I couldn't hold it, and ended up jumping ship. Bought into the next pullback, and was looking for that secondary follow-through on kind of a re-up. Didn't get it. Dove lower down into the next portion. And we finally got the follow-through to the next new high. We don't really have another pattern. That was an L2. And the problem is that shouldn't have happened. We've got an L4. The L1 and L2 doesn't really fit any sequences inside here. So it makes sense that a lot of traders are kind of exiting. Up at the top, taking some profit off the table. Take a look across the field here, see what's going on. Gold is... I mean, right here, as far as a risk standpoint is concerned, a lot of buyers have the opportunity to buy here because their risk standpoint's only back down to the lows. But really the reward is... I mean, it could be better, I guess. I don't know. It's kind of too iffy for me. Unless you're dip buying. Market kind of double topping up here, which again makes sense because that was a disappointing pullback. Nobody really necessarily wanted the L2. They were more looking for like an L1. I can't get a fill on the S&P to save my freaking life these days, so that trade's gone. Came close, but, well, I missed the bounce. They were in the zone, to be fair. It is the zone that we highlighted. I was being greedy. I wanted the deeper, I want the deeper zone. Still haven't filled settlement yet. Do I dare look at the 2,000 tick? Oh, well. Okay. It's not as bad as yesterday. I mean, it kind of is. Nice little continuation, rotation back up. I like that, continuation, rotation. Bulls will be buying on this dip down into the 46s. That's the previous confirmed POC. My concern here is that these highs have already been disappointing. I don't really want to be holding bags on a disappointing top, you know what I mean? It may go back up to the highs, and that's great. Then it'll reconfirm some things. But where it is now, it's just not that great to me. Definitely lower risk. Or low risk, high reward, low probability. Which so far has been going pretty well today, to be fair. Starting to see them chop around just a little bit. Pulling back up off of that previous confirmed POC. Got 9 minutes or so until we hit 10 o'clock, top of the hour. Uh-oh, that candle's not looking so good. What just happened there? S&P bulls may be looking to buy below that previous bull bar for a quick scalp back to the upside again. It's inside the zone of support. I would have really loved to have seen it go farther down, but there will be bull scalpers there in the S&P. You know what I would rather see is them coming down and filling the gap down here at 87. Has it hit 87? No. Okay, it's hit it. We gotta wait for it to fill. Thank you. That way they're filling the gap. It's just a much more logical point of interest. And out. Nice. Nasdaq still just kind of hovering. That previous POC is holding. Nice ABCD correction back down to it, but got 6 or 7 minutes until we hit 10 o'clock. Transition over to the extended session. Like I said, both kids are actually in school today, so we've got a semi-normal schedule. So, right, get this. First day of school for Evie. She's pumped, right? My daughter, Evelyn, she's super excited about school. She woke up at like 5:30. Is it time to go yet? Like, really excited. Finally, we get things going. Get an email this morning. It's going to be a half day due to heat. Like, oh, man. I guess it's kind of nice because it's like a way for her to get introduced into it without a full schedule, but man, she was so excited. My son's like, yeah, another walk in the park, whatever. But she's going into kindergarten. That's fun. Big times. Market's still jerking around these 546s. Big bear bar. Kind of concerning. I mean, I already have some concerns about these highs, but Oh, I didn't have the chart scrolled forward. I didn't even see the dip on crude because my chart wasn't scrolled forward. Are you kidding me? Oh, look at the entry point too. Son of a mother. What? Oh, I did. Ooh. Are you kidding me? I didn't. My chart was like this. I didn't even see it get down to it. Well, there it is, and there it goes. Nothing I can do about it. Oh man, that sucks. I'm gonna stop looking at this this chart now. Just move over here. I didn't even see it was scrolled forward. Ugh. Whatever. We have 4 minutes until we swap over into the extended session. Feel free to get those questions in. We'll get those covered for you. Bulls continuing to keep this grind going. If we're looking at this from a developing, they're starting to break above 51 quarter. This is their chance to try to take it higher. I'm viewing this high with mild disappointment from the last pullback, so I'm not as aggressive on this one. I would rather see a deeper pullback, maybe even below the last 37.50s. But at the moment, it's demonstrating that the bulls are trying to come in here. So depending on your aggression level, they're closing above the POC. I mean, they are showing that they're here. I just don't like it that much. Scalpers may even choose to buy into this little dip underneath here, with the probability dictating that we should have at least at the very least a half to one pop to the upside. Nice wedge dead clearance. Yeah, I know, right? Wow. I do like this trap underneath that little middle peak, though. That looks really nice. The bull's got to follow through. And again, I'm still looking at this top with some disappointment. And I'd like to see L3, L4 off of the base. That would put price back in like 28s. Yeah, you too, Ace. Have a good one. And everybody else who's ducking out, have a good one. Bulls couldn't get it to go. So we only have good price action on Monday. I don't know that that's the case. I mean, we had some pretty good follow-through on that last pullback to the upside. I mean, I guess it really depends on what's going on. You know, keep in mind, and this is something we sort of touched base on a little bit yesterday too, we're going into, you know, this is kind of the last week before kids are going to school. A lot of kids are going back to school last week, this week, next week, etc. This is a really, really sloppy week. So it's going to be kind of herky-jerky. You know, for me today, my schedule is back to normal for the most part for the morning, and then the afternoon it explodes again. Everybody's schedule, it's kind of like that. So I'm expecting, or I would expect, the volume to be similar. The nice thing is we can still use the exact same structure. I mean, we knew to look at this last pullback with kind of tilted eyes a bit, like, yeah, okay, maybe, but it's just not worth the risk, and this is why. You know, we've seen this over and over again. When the market is disappointed, the next pullback is usually a lot bigger. That's what we have here. So, I mean, even though the price action doesn't necessarily give you the fastest of setups in the world with those, you know, 40-tick scalps in 5 seconds, we still have some pretty decent clarity, all things considered. And if that gets taken away, then I just stop trading for the day. It's just not worth the risk anymore. Nice little pulse underneath this low. We are going into 10 o'clock. So this is a really interesting zone here on the Nasdaq for swing longs. A little lower to the 27s would be nice. Some extra proof would be nice too. But anyway, that's going to do it for the morning session. If I missed any questions, feel free. You can always drop them in the comments below on the YouTube side, or shoot me an email, jhb@ssftg.com. For those of you who are going to be hanging out into the extended session, give me a couple seconds here. I'll post that link in Discord. We'll get that all rocking and rolling. But yeah, enjoy the rest of the day. I hope you had a great morning so far. And if you're going to keep trading, just be careful. And yeah, roll into the end of the day with a smile on your face, hopefully. Otherwise, enjoy, rest up, and we will see you all tomorrow. Thanks.